Hear ye, hear ye. It is our honor to welcome you to the KingMaker Podcast.
Well, welcome back to the KingMaker Podcast. I've been traveling the world over the past couple weeks. Alejandro, what have you been up to?
Yeah, so basically I released a website for KingMaker, and I started getting on the articles that we talked about, and I announced a few times on Twitter. And we have a YouTube channel now, so I can release content when you're away.
So this is great. So I'll keep taking time off and letting you work. How about that?
No, please, the show isn't the same without you. I can't. It's not as interesting without you
Well,
around.
people give me that great feedback that I'm so accessible with my questions based on how simplistic I am. So, speaking of that, another protocol we're going to be talking today that I'm here to learn. I know you've been diving deep with it, Alejandro, but excited because everybody's talking about Arbitrum, everybody's talking about GMX, and we have them here today with Coinflip. So, without further ado, let's kick it over to Coinflip. Tell us a little bit about yourself, sir, and tell us a little bit about GMX.
Thanks so much for having me in today. My goodness. Well, I'm so go by Coinflipcanada or Coin to keep it short. I've been part of the core team of GMX since we launched and was very active within our community during some earlier iterations because we've sort of been a protocol that has been sort of in the making since the end of 2020, but took full shape in late last year when we finally launched on Arbitrum. Been active in crypto since 2017. Done more things in my life than I can probably list out, but it was a unique opportunity to sort of bring together a lot of the things I've worked on when X, our lead developer, asked me to join the team. It's sort of amazing how all the little things that you do along the way, come together. But in terms of GMX, we're deployed on Arbitrum and Avalanche. We're a perpetuals and spot exchange powered by oracles, delivering on-chain composable trades. Where people trade, and so we're we're quite happy. We've done a little over 50 billion of volume to date. We have, even in these sort of constrained capital times, we've got a little over 200 million of liquidity that backstops all trading on the protocol, and we've been at least in measured in ETH, which is what we do most of our distributions, and we've been making week on week all-time highs in terms of distributions just based on the amount of volume that we continue to be generating.
So what's it feel like to see that growth, even in, as you said, the constrained times we live in?
Well, it's humbling because you spend a lot of time looking at how will this protocol work during all market conditions, because it's kind of easy to say, well, everything will be great when the markets are running, markets are hot and everything's active. But to see that, while obviously in dollar terms volumes have come down, in terms of actual volume of inventory that's being circulated that's happening, it's still there, and that's always been a big part of our belief in the platform, which was being a liquidity provider on GLP or being a staker in GMX. You're earning distributions from actual activity. Which is making sure that there's a liquid market on chain for leverage trading on two of the leading L1 and L2 for Avalanche and Arbitrum respectively, and it's. I'll put it this way: it feels good. It creates great confidence, but obviously nobody enjoys watching the markets doing what the markets are doing.
Yeah, when I got into crypto, I thought the number only went up.
Yeah, apparently, Twitter didn't get the memo.
Right.
No, but I've spoken really deeply to one of your partners, Omami. They incredibly excited for your project. He spoke so many nice things. One thing that's well, that at least him as a CEO is really excited about is your spot trading platform in X4. He was talking a lot about it with me in the YouTube video that I made with him last week.
Yeah, so X4 is really an idea that we've kept working through on and we keep refining. We slightly deprioritize is not the right word, but there's a limit to our development resources, and we've decided to prioritize our next round of development around our synthetic products, all of which will eventually link back to what we're doing with X4 as well. But X4 was really about us saying, how do you look at an AMM and how do you make sure that today it is actually working to serve protocols, and not to DeFi protocols? Because I think that Uniswap was revolutionary. Uniswap v3 in many ways, what it's doing is also extremely revolutionary. It's virtually created something akin to an order book within an EVM environment. But there's a lot of additional tools which most projects are sort of forced to deal with themselves. And we said, how do you start to create infrastructure within the AMM itself to make the life of projects easier? And obviously it comes from our own necessity and needs as well. And so when you start working with projects like be it Umami or a DopeX, you start finding solutions not just for people to trade their own liquidity and have their own liquidity pools. And that could be that could be things like taxes. It could be things like different swap curves, but it's also creating the right infrastructure so that they can operate their vaults. They can set those up for within their protocols usage in a way that is shaped for their requirements. And so we've sort of tried to it's definitely a product that we think there's going to be a lot of interest in, and yeah, we're just working out the pieces.
All right. So what is interesting to me is the excitement about GMX from both protocols and retail. So coming from a retail perspective, I'm new to GMX. What are my options? What can I get involved with? Where can I make different investments? Break it down for me. What does GMX look like to me as a retail investor?
Okay, well, so let's start with the product itself. I mean, as we said, it's primarily a perpetuals exchange. It's a place where you as a trader can come to and directly on chain with control of your keys from your wallet trade and leverage trade. You are able to open positions currently up to 30x, very soon up to 50x on leading assets like Bitcoin, Ethereum, Uni, Link, and on Avalanche, Avox as well. You're able to execute those trades and do them, as I said, from your wallet without having to go into a centralized exchange, without having to lose custody of your funds. Doing so in a way that gives you that immediate ability to do it exactly where we feel the majority of traders want to be, which is to be able to control and do it themselves. So as a retail trader, that's one of the easiest aspects. But I think one of the other great things is that we've created a product with GLP, which effectively, depending on how you want to view it, it's a liquidity pool. It's a term we all know, but more than anything else, it's a liquidity pool that is very much agnostic as to what we're holding. We hold an inventory of assets, roughly 50% crypto assets, roughly 50% stable coins, that effectively creates a deep liquid market for traders. And that passive product has performed very well throughout this entire period. You could say fortunately, or you can say regrettably, leverage is a tool that should be used carefully. And to date, traders on GMX are actually about a little over 20 million negative P&L, which means they've traded. Now they may have been hedging, they may have had various reasons why they went about in open positions, but they've effectively lost money, and that's gone back into GLP. GLP continues to earn fees from opening positions, closing positions, swapping positions, borrow fees on open positions, all of which have allowed us to continue to pay out in ETH and in AVOX, well above market yields from the actual work that the protocol is doing. To be very clear, this is one of the key distinctions, and I think it was mentioned at the beginning. We don't pay out, inventory from GMX tokens. We pay out from the fees that are collected, and that goes back to liquidity providers, and it also goes back to stakers of the GMX token. And that's, I guess, the third one, which is you have the opportunity as a holder of GMX to stake those GMX tokens, and both accumulate your share of trading fees, and we've got a number of other mechanisms built in within our staking mechanisms, which really rewards long-term stakers of GMX. So 3 different options, and if nothing else, you're always open to come in and use our zero price impact swap trading, which, I'm trying to find the right words. It's amazing how much swap volume we do compared to some of the bigger players for a part of our business that's hardly even shows up on the radar. And that's just because, we work with oracles, so we have, the best on-chain pricing that matches centralized chain pricing. And we're willing to execute a trade at $1, $100, $100,000, or even $10 million potentially, depending on the asset, at that price.
So sparked a lot of questions in my head as you're going through that, and I want to go in 2 different directions. But first, I'd like to talk a little bit about, you mentioned the tokens, like to understand a little bit more about your tokenomics and distribution. And then you mentioned oracles. I'd like to understand a little bit more about your security protocols around that. But first, could you talk a little bit about the tokenomics, distribution, GMX and GLP?
Of course. So to keep it very simple, as on date, 70% of all fees generated from each respective chain go back to liquidity providers on that chain. So if you go ahead and you stake on Arbitrum, 70% of the fees generated from, as I said, open, close, swaps, borrow fees, all go back to liquidity providers to pay out an ongoing yield, which historically has varied from anywhere from 20 to even as high as 60-70% during some very volatile periods. And GMX stakers receive the remaining distribution, which is 30% of protocol fees are paid out block by block every week to GMX stakers. And that's paid out from activity on all chains and all liquidity pools that we provide, currently being Arbitrum and Avalanche. In addition, we have, as I mentioned, a lot of mechanisms that really reward, kind of in the way that a lot of people do VE models. We have our own model, which is that we also do have a bootstrapping program, which was ESGMX, which is slowly being tapered down. But rather than create a sort of a farm and mint token, we've created ESGMX, which are effectively identical to GMX in their earning capacity. You stake them, you can earn ongoing dividends and returns, but you also have the option, if you'd like to monetize them, to vest them over a 1-year period. Now, the reason that's been very important is that collectively what it's meant is that people who have come in and staked liquidity, still a little over 200 million, they've been highly patient long-term investors. People who know that it's as being a market maker or being in a liquidity pool isn't about the returns from 1 week. It's actually about the returns you make over an extended period of time by allowing the market to come to you and you simply helping to make that market.
So it's really fascinating. Can you get in again a little bit even deeper? What's distributional wallets look like? You mentioned some people who potentially could be viewed as market makers. Is there a couple big wallets that hold most of the coins, or how does that look?
I haven't checked in the last few days, but I believe that out of, let's say, 200 million across the 2 chains, I think maybe the largest wallet might be somewhere around 20 million. And really the distribution is quite deep. And I think that's one of the things we're very proud of, because effectively what we've done is we've allowed people to get exposure through GLP to a product that has typically been the purview of actually institutional market makers. we basically provide the same functionality in the marketplace by backstopping liquidity for traders. So, I don't have the number offhand, but it's actually a very wide distribution. I'll put it this way, we've yet to reach a point on either GMX or GLP that we're worried about any concentration risk. And a lot of that has to just do with the history. I mean, the way that GMX came about was a merger kind of that brought together Gambit, which was sort of our alpha product that we had launched on BSC early in 2021, and XFix, which was actually our lead developer. X is the very first project that he launched at the end of 2020. It was sort of bringing together the liquidity, the project, the communities, all of which were done through pure community raises, no VCs, no institutional capital. And so that entire process has created a very diverse set of holdings for the protocol. That doesn't mean that institutional capital hasn't bought in, but if they've bought in from the market just like everyone else. And it's actually helped to really keep our distribution just right, because obviously quite often VCs like projects that they get the opportunity to sort of dictate the terms and get in early, and that never happened with GMX.
Right. So you mentioned GLP 70%, GMX 30%. What type of fees does the protocol get to earn and sustain yourselves?
So what we've done is we've gone to sustain the protocol itself. What we've done is a few things. We have some small weekly, I think it's 10,000 GMX are sold through Olympus Pro on a weekly basis to help sort of continue to build up the treasury. We also have built up what was originally called the floor fund, but is basically an asset that's held by the treasury, which I think somewhere around between 2.5 and 3 million, depending on current prices of various tokens. All of those are sort of held by the DAO, in addition to all of our liquidity and everything else. So what we've done is we've tried to set aside, sitting in USD stablecoins, we've got roughly 18 months of cash flow that's been segregated and just set aside to fund ongoing development. And then the entity that's effectively now slowly is turning into our DAO has control of an even larger set of assets that can be deployed as and where they think it's appropriate towards growth of the platform.
That's great. I mean, sustainability is so important.
Especially now. Yeah. I was just going to say, I'm glad you brought it up, because one protocol that we interviewed in the past, Redacted Cartel, they had to really, the emissions from their protocol wasn't enough to sustain the DAO anymore, and they have a governance proposal now to keep on working. Since this is a bear market, it's going to be tough on protocols everywhere to keep on going, because developers and front end developers and marketing, all you guys need to eat and have a roof over your head and all that, which is why I'm glad he brought it up.
No, and we've constantly looked at this, because I mean it's been a constant review internally. We want to remain lean. We don't want to have a very large team, because we find there's a certain point where you get diminishing returns from adding people. But at the same time, we wanted to make sure that, as we said, that there was a sufficient runway there. And I think so. We think we've struck the right balance. In our most recent governance plan update regarding our synthetic platform, we have proposed that a portion of platform fees may then start to be also segregated there to fund ongoing activity. And as an example, right now, if I were to average over the last number of weeks and then sort of extrapolate it, GMX in its current iteration is doing somewhere in the vicinity of 70 to 80 million a year in distributions of fees, annualized. And so, there's always the option to take a small portion of that and direct that towards funding ongoing development cost or any further expansion as we continue to add more protocols within the GMX framework.
Yeah, that makes a lot of sense. I mean, just from traditional businesses, based on their revenue, having a portion of profits not given back to shareholders, but kept for the sustainability of the company, reinvestment, capital investments, etc. So,
correct.
love that you have options. Go ahead.
Yeah, no, I was going to say it's not something that, as I said, it's something that we are proposing that as we launch our next product, we're not looking at, as we said, we actually debated if we should make these changes. We said, listen, we did our job. We made sure that funds were in place and tucked away to develop. So right now we get to just focus on that, and let the market do what the market does.
Right, right. I guess from my perspective, in my opinion, the less expansion or inflation of tokens, as that can be curtailed, and the more sustainability of the protocols where they can live off the revenues, to me, that sounds like a great place that hopefully everybody will get to, where it's, as Alejandro and I have talked to others, where it's not based on hopes and dreams, where there is real revenue and real sustainability within those protocols.
Absolutely. I mean, I think I think that I want to be fair. I think there are many concepts out there that the reality is that the stage where they will be able to generate revenue is much further out, and so they have to work with a different model. We approached it from the perspective of, how would you expect capital that is, providing liquidity, doing this business on a day-to-day basis, how would they do it? We built a model, kind of bootstrapped a concept built around that. But no, you're right. I mean, I definitely think that now people are going to be looking back and saying, okay, well, selling tokens doesn't really work in these markets. How are you actually going to continue to generate something that people will want to own and want to invest in? And so, no, you're right. I mean, cash flows and the actual underlying business will matter, and they do matter.
So pivoting, I brought this up a little bit earlier, like a couple, paths I wanted to go down, hacks, security. We've seen lots of situations in 2022 that have really impacted the markets, and lots of funds have been lost. I know oracles, I'm not a dev. I don't pretend to be, but I know that there's vulnerabilities when people can trick oracles. And so talk to me a little bit about your security. What audits have you done? Where do you all stand from that standpoint?
So the entire platform has been audited by ABDK, who are the same auditors who did Uniswap v3 and many other DeFi, sort of very flagship DeFi protocols. It was much to our community's consternation that I think even when we launched, Gambit and GMX, there was a multi-month wait because, building protocols like this is not easy. And to audit them, you want auditors who really are looking at the depth of a protocol and it's not just about, auditing a copy paste. So, that was a very important part of our initial rollout. Oracles are something that we'd spend an inordinate amount of time focused on, and rightfully so. I mean, at its core, we work with Chainlink oracles, which is sort of the bedrock of our system, but also supplemented with additional oracles that work with the same nodes, and taking immediate data from large centralized exchanges that have deep liquidity. And that deep liquidity point is a very important part because for us, we're a platform that allows you to trade instantly using Oracle pricing. And that means that we need that Oracle pricing to reflect effectively assets that we trade, which are in the deepest markets and that are large enough that they are not manipulatable. So that is, I mean, without giving away too much, it's platforms like Binance, FTX, Coinbase. Those are the type of platforms that you're talking about that have that proper depth for the assets that we trade. It's also the reason that as on date, the number of assets that we carry on GMX is relatively limited. There are other protocols that have taken a much wider view of the assets they carry, and I completely recognize the reasons that they do it because there's demand to trade, so you should have those assets available. But it also means that you start to enter some assets that are not as easy to manage. Part of these issues we're actually trying to find better ways to address as part of our new synthetic platform will be coming about. But the way we've approached it right now, we feel being in reliable deep markets is one of the greatest safety and security steps. And the fact that we operate both our own network of oracles plus Chainlink for liquidations and to backstop all activity and to cross-check all numbers so that it's not that somebody can trick one. You have to, the cost of being able to trick oracles in the way that we're set up would mean that you'd have to be able to move entire markets that are manifold larger than us today to be able to try to make a relatively small profit in comparison on GMX. So it's effectively not cost effective for somebody to try to do that to us.
Good to understand that. I appreciate that detail there. I have not ventured too far off of Ethereum mainnet with a lot of different retail plays I've made. Just being, I guess, a little chicken or cautious. I don't know.
Well, but you know what? I would say this. Come over to Arbitrum. I mean, as far as I'm concerned, I hardly draw a distinction now. And the reason I say that is I think you will see in the coming, months of the year ahead, that's where DeFi is moving. I mean, DeFi needs to live with other protocols, and DeFi needs to live in an ecosystem that is safe and secure, which is what Arbitrum draws from Ethereum, but that's fast and deeply interconnected, and that's what Arbitrum is already providing. And you already can see a lot of other large protocols that have put their toes in and are just getting ready for, let's say, the party to start.
Right. We basically have become an Arbitrum podcast, Alejandro. I mean, I think our last 3 or 4 interviews have been with folks on Arbitrum. And being our base is being our base is convex. We do get that every 2-week income coming in that can be moved around. I've had some personal targets that I wanted to hit on a few things within mainnet, but I keep saying this, but whether Umami or GLP, GMX, I got to get in there and diversify. So I'm really appreciating as we have these discussions, and even Alejandro, that's why we started this podcast. We met in the Discord there over on Convex, but it was about we wanted to learn and grow and know and talk to the people that are making things happen. So truly appreciate these learning opportunities to do with you.
No, yeah, and I definitely appreciate it as well. Being able to learn all these protocols and understand what I'm getting myself into. Because in my way, I could also, if by me learning, I get to also teach others. And yeah, like the last few episodes we do in Arbitrum, Arbitrum has so many like really interesting projects and like and it's interesting because like Coinflip said, like they're all working together. They're working together is a lot better than just like going against each other, like fighting each other. They're building together and raising Arbitrum up with them, and yeah, that's why I would just always go back to those projects.
It's like the communities are teaming up together. And real quick, I got to give a shout out to your new mic. It sounds really good. So put in a plug for the Gitcoin grant that allowed you to have that new microphone you're talking through.
Thank you. You noticed. Oh, that made me so happy. Yeah. So everyone, a little ad before we continue is
sorry,
that
Coinflip.
we have a Gitcoin
we have to pay our sponsors.
Sorry, yeah, but we have a Gitcoin grant. So if you want to help us, if you want to contribute to us creating content and getting better quality mics to be able to continue the show, it would be highly appreciated if you can go and donate to our Gitcoin grants. It's how we're able to fund the show, get better equipment, continue putting time into making content, and yeah, you guys have helped a lot so far with around $650, I think, and counting. But yeah, I really appreciate all the things you guys have done for us.
Yes, thank you so much. All right, Coinflipcanada, can you hit us a little bit more? So what's going on? So we got a little bit of the background, talked a little bit of retail, talked distribution, talked security, but what are the additional products you have?
Well, okay, so in terms of our immediate focus right now, we're actually spending a big part of this month on I guess the fundamentals. We're re-reviewing everything within the protocol. We're really just trying to make sure that everything is humming along, doing a lot of work behind the scenes on automation and on decentralization. For example, we're now moving our hosting into decentralized servers. So, well, I guess not servers, but we're decentralizing our hosting so that it's outside of our hands. We're continuing to work with KeeperDAO, who is this wonderful partnership we're working on, where they're actually helping us to effectively, and this is going to sound, I'll have to explain it, but they're effectively arbing our pools against other opportunities in the market, and then putting the profit, 80% of the profits of that back into our fees, and they go back out to our liquidity providers and everyone else, so that we can keep optimizing the system, and it'll allow us to keep tightening up our swap fees, drive more volume, and do so always in a way that our reference pricing starts to become the reference pricing on the chains that we're most active on. So there's a lot happening on that front. But in terms of our next steps, as I mentioned, PvP or synths is the next big activity that we're looking at. It's effectively creating a protocol that will be able to handle a lot more assets beyond the physical assets that we currently hold one-to-one in our GMX GLP model. Within our synths model, we are looking at a model that both effectively creates markets that can be fired up based on anything that has a pricing oracle, can have use cases that go well beyond crypto, and that have effectively a liquidity pool that is both made up of passive liquidity providers but traders themselves as well, so that anybody who is trading on the platform is also a liquidity provider. And it creates a very compelling bootstrapping process where, as volumes come in, there's incentives for others to come in, but the entire time you're also helping to sort of on a cooperative basis build up the liquidity of the platform. So that's actually it's a model that hasn't been really done by any of the other players in the space. We're quite what's the right word? Excited sounds like much of the right word, but yeah, no, we're quite excited by the prospects of what we think it can do in terms of helping to address, even low liquidity markets in a very interesting way. And then, as mentioned and discussed earlier, X4 is the next step after that, and in between, it's likely to be chain expansion. Chain expansion is not something that we are prioritizing right now. We feel we're on two very strong chains that have very, very good communities, both institutional and retail. But there are definitely some interesting opportunities. We've had many chains who've approached us, but we want to sort of be able to take out both of our synthetic product and our existing product out to the next chain that we go to, so that we're able to sort of bring out an even more robust trading environment. But I think, and sort of going back to that point, I think one of the real compelling parts of GMX is that we've designed the protocol to work and function within public blockchains. So for us, being able to be on a chain like Arbitrum and Avalanche, work with a partner like an Umami, for example, to do vaults, to work with DopeX to do liquidation protected trading positions. But minting of stable coins with Yeti, which is something we're working on, but in the coming months as they do their protocol upgrades, I think you're going to see a lot. We really find that we are stronger for that interoperability and connections within the DeFi ecosystem on each chain that we go to.
Yeah, so I'm really glad you cleared up the next steps you're gonna do, because I know a lot of people are watching you, as I said, and it is nice to like clarify like what's gonna be coming up next for the people who are supporters and part of your community. One thing that I've been asked a lot from previous interviews from the community feedback is that they want me to ask my guests if they could go a little bit into technicals of how the products work, because a lot of times devs forget that retails were kind of I like to call smooth brain. So like it's a bit harder for us on our own to like understand to the same depth, like without a teacher or without anyone explaining how these protocols work. So how are you able to, for example, upgrade your trading amount from 30x to 50x? How are you able to provide zero slippage on spot trading to with the assets you currently have in GOP, things along those lines? So like a retail person can understand.
So, 30 times versus 50 times leverage was something that was always, the protocol was always able to handle because it simply comes down to maximum, the minimum amount of collateral that's needed for a position to remain open. So, obviously these changes like this are under time locks. We're able to execute them. The only reason that we've been waiting and we didn't do 50x before was we were not yet comfortable with the speed and the speed at which we were getting our Oracle updates. As we've continued to review, sort of back test, get comfortable that we're getting information in a timely manner, we're able to execute the 50x works. But one of the important things, and I probably should have mentioned it earlier, and I think since we're talking about the technicals, is that we made a few months ago a change in the protocol, and it's what at least what I call the speed bump. And it's something that very much akin to what some stock markets have also done, which is how do you find a way to avoid people front running? And the model that we came up with was really simple. Every time you want to open a position or close a position, we will immediately pull an update of the Oracle prices, and you will be executed subject to a reasonable slippage, which you can decide how much that is. You will get the fair market price that effectively within under a second of when you ask to place an order, and all of that's verifiable and transparent. And likewise, when you want to close your order, that exact same process plays out. What that does is it creates for a protocol that doesn't favor the high frequency trader, that institutional desk who is trying to simply scalp out small differences from retail. It's actually a protocol that's built saying, if you're a retail trader, we will give you the price. If the price is better in that 1 second, you get the better price. If it's worse, as long as it's worse but within the range that you'd like, you will be executed fairly at that price. I think that's a very big part of what's actually made GMX very attractive for retail traders. You're not actually in the trenches against high-speed money that's actually sort of scalping you along the way. You're getting the market price. And once that was implemented, and we, as I said, as we've been able to test, we feel much more comfortable being able to increase the leverage that people are able to take when opening positions on GMX. The second question had to do with zero slippage swaps. Again, very similar thinking, which is that as a protocol, we view that liquidity is deeply and broadly available, and it just needs to have a reasonable swap fee. And so what we've tried to do is basically create pricing that we know that within the range of the current price, plus or minus the swap fee, we continue to get Oracle updates in a timely manner. And those timely Oracle updates mean that we're able to provide that deep liquidity and sort of an assured pricing, which we think works very well as a model. We do know that having higher velocity of swaps for the amount of capital that we have in our pool allows us to generate a lot more in fees, and those higher fees more than cover for any slippage and the like, which we build into effectively the pricing. That's kind of more of an economic answer than technical answer, but I hope it helps.
Yeah, it definitely does. It definitely does. Alejandro, do you have any final questions for our guest?
No, I was just really glad that you touched up on it. I'm sure the audiences can understand a little bit better, and I do appreciate it. One thing I was curious before, because I know we're kind of running to our time limit, is you as an individual working in GMX, what is something that's exciting to you about the project, or that's coming out soon, or that you're currently working on, or something that's already coming out, etc.?
Well, I think it's going to depend on when this goes live, but at the end of June, beginning of July, we're we're being featured as part of Arbitrum Odyssey. We're the first standalone project that's being featured as part of this campaign. And I think and mind you, this is about something kind of beyond GMX, but I think Arbitrum Odyssey is something that we're quite excited by. It's an opportunity for Arbitrum to help showcase, unique protocols, DeFi, NFT, bridges within the ecosystem, and really help to introduce people to Arbitrum. I think the Arbitrum team has been working for quite a long time, but even the mainnet's been live since September. There's only a handful of people I think who are really familiar with it, but I think the fact that Arbitrum is now going to get its opportunity to sort of be up on center stage in the next few months with that campaign, with the rollout of Nitro, which is going to further reduce transaction costs on the Arbitrum network, which they've been kind of artificially throttling right now because they just wanted to keep testing and make sure everything was running well. So to a great extent, Arbitrum and a lot of what's happening with Arbitrum in the coming months is probably one of the things we're really excited about. So as I said, if people do get the chance, they'll be, as part of Arbitrum Odyssey, you'll be able to come over and doing any of a handful of transactions on GMX, like making a trade, making a swap, being in GLP, the things we talked about today, actually enter you into the chance to get an NFT from Arbitrum that they're doing as part of this campaign. And who knows, maybe more.
Awesome. Maybe more. Interesting. Okay. All right, so I love to ask this question as we get to the end, and I will ask you this, Sir Coin. It's 2025. Everything has gone perfect as far as what you all envisioned. What does 2025 look like to y'all?
Wow. Well, in some ways, our hope will be that while we would all love to be the ones who are leading GMX, hopefully we've done our job right and we've brought in more people, we've grown, and there is lots and lots of projects that are under the GMX banner, all working on solving the same problems. How do you create liquid markets? How do you bring the financial world and the tools that they need onto the blockchain? And how do you make that experience reliable for everybody? In an ideal world, if I have a chance, I'd like to keep spending my time thinking about those problems. I won't say I'm smart enough to build a blockchain or do any of those, but coming from a background sort of that straddles both areas, I would love to be able to spend time on that. And GMX is a platform. I mean, our goal would be to be the connective tissue on all the chains that we're present on, being able to be a protocol that can absorb risk for a reasonable fee, create markets, do that in a very transparent fashion. And we think that it's an important aspect of the DeFi ecosystem, because the vast majority of what happens in DeFi today is all about over collateralized positions and adding leverage, but within a proper framework of risk control. I think really starts to open up a lot of unique opportunities on chain.
Sounds like a good future. So the other thing we always like to ask is, we want to give you 30 seconds or so to shill whatever you want to shill. Is there anybody you want to shout out, any Twitter handles you want people to follow? What are some resources?
Anything to people check out?
Anything you want people to check out?
Well, let me shill probably the coolest part of the GMX community, and there's a lot, because, by the way, anybody who gets a chance, go over to the ecosystem page on GMX, and you're going to find a dozen different protocols who are working with us, building with us, helping to just, make information available. But the GBC, which is the GMX Blueberry Club, it's a standalone project built out by community members who just loved the blueberry lifestyle that GMX brought about. It's the leading NFT project on Arbitrum. You can go to Tofu and any of the other exchanges on Arbitrum and be able to get a GBC. There's a lot happening over there as well. I don't I'd say, follow the GMX Twitter. You can follow my Twitter, Coinflipcanada, but definitely go and check out the Blueberry Club as well. And I think you'll see a wonderful representation of just how wonderful a community GMX has been able to build around it.
Awesome. So you have your own Blueberry as well?
I do. If you see me on Twitter or on, actually maybe I'm not sure, on Telegram and the like, my Blueberry wears a suit because I now luckily no longer have to. So he does it for me.
I see that. I'm looking at your Twitter handle right now. Excellent. Yeah. Well, really appreciate your time today. Great conversation. Alejandro, I got to get off of mainnet. I got to go to Arbitrum. What do you think?
I can't agree more. I really, everything I do is on mainnet, but every few times that I go on L2, paying 30 cents to send ETH or something like that, like $1 or $2 just to deposit into GMX, blows my mind. I wish I could experience that more often, but I wanted to say, at least for personally, thanks for coming on the podcast. And you were a protocol that a lot of people has been requesting for like a long time now. So I'm glad I was able to give them the content that they wanted, and hopefully more of our community and the people from mainnet can go to Arbitrum and hopefully work with you guys in the process.
We look forward to it.
Kingmaker Podcast.